Next, I want to share the 5 businesses I'm looking at for the year 2021. Now, these businesses are on my radar, and here's why. Starting out with, of course, all over the news, Airbnb. Airbnb, as if you've lived under a rock, you may not have heard of it, but you probably did anyway. Airbnb went public yesterday, and here's the crazy part about that. Obviously, in a situation, in an environment that we live in right now, travel's been down. People haven't been able to go out. Hotels are dying. And even Airbnb had a rough patch. They had to take out $1 billion in debt in April just to stay afloat. Now, here we are in December, and yesterday Airbnb went public, targeting a $30 billion valuation, which got upped a little bit, so around $30 to $40 billion they targeted as their valuation. Now, in one day, they jumped to $100 billion. Okay? $100 billion. Now, what are my thoughts on that? Okay. I thought because of the target valuation that they had, I thought it would be a good buy because it would reflect the current set of circumstances, the current environment. And because of the current environment, there would be pent-up demand. People would go out and travel. So Airbnb would see a lot of activity. And at that point, I suspected the stock would go up, which is why I thought it would be a good buy right now. However, it appears that the valuation right now reflects future projections. But I don't even think it's that deep. I just simply think that when you put something out to the public, and you put something out there for the public to own alongside with you, and it's a brand that you know, a brand that you can feel, that if you're familiar with the user experience, it's something that simple that can make you actually want to go buy a piece of it. And that's really all it takes a lot of times to drive up the value, is a lot of media attention, which drives demand from the public at large. And next thing you know, you have a company going up to $100 billion valuation that just had to take out $1 billion in debt in April just to stay afloat. Imagine that. Now, it's interesting for me to see what happens next, because I expect with any new tech IPO, Facebook, Twitter, they all dealt with this. There's going to be ebbs and flows, peaks and valleys. This one just started with a crazy peak. Where's it going to go next? I only think it can go down before it goes back up. I don't think this is the end-all be-all, but I will expect there to be some volatility in the stock price moving forward. That said, congrats to Airbnb with a successful IPO. Good for them, but that is crazy. Now, another startup, another heavily hyped startup. In fact, this was known as the most hyped startup in the world at one point, WeWork. As you all may know, WeWork was sort of the unicorn, literally and figuratively, of the startup industry, raising money over and over and over and hitting these crazy valuations, 10 billion, then it was 20 billion. And if you look closer at their numbers, the valuation came at, which is a preposterous jump, but at a 72x to revenue at one point. Even 10x is really good, but 72x, 72 times revenue is what they put their valuation at. Now, the founder, Adam Neumann, stepped down. A real estate CEO came in. They really doubled down on their core business, which is, look, we have buildings, we have office space, then we sublet. Basically, leasing arbitrage, right? That's their core business. They jumped into residential, education, effectively in the attempt to create a we universe. Now they've gone back to that core business. Again, they're still suffering because the WeWorks are empty. All the big office space, the big leases that they have, no one can really service them. So what's going to happen? Do they have enough capital to sustain and weather this storm? What's going to happen on the other side when people come back? What about all the people that left the big cities to move into smaller markets and buy homes? How will it all look in another year or so? That's what I'm really curious to see, because number one, doubling down on their core business, what does that mean for them going forward? Two, can they get back to some sort of hype level? Will people be bullish on WeWork again? I really don't know. That said, as someone who leases out of WeWork, I happen to like the fact that it's quite empty up there. So that's just my 2 cents, and it really means nothing, but that's one thing to watch. Now, another heavily hyped IPO, which is another one to watch for next year. Of course, I would say this. When there's a macroeconomic event, whether it's the global recession, whether it's the 2020 pandemic, it changes circumstances for businesses. And I look at it as, let's say you're running a play as a football player or a basketball player. You can score points, then the defense will eventually catch on to what you're doing, and they will adjust. And now you have to figure out how to score points against a new defense. That's effectively what any change, whether it's legislation, whether it's a new competitor coming in, you just have to know how to adapt, adjust, pivot if you must. And one of the companies that actually benefited from everything that's happened, of course, Amazon is one. Airbnb was another that was not. DoorDash. DoorDash just has been crushing it in 2020. And for obvious reasons, people can't go out and shop, so they need their food delivered. Now, they went public yesterday as well. And their target, just like Airbnb, was $30 billion. And where did they end up? $72 billion. $72 billion valuation. Now, that's more than double than their target. Again, coupled with Airbnb, it suggests to me that there's again, that familiarity. People know it, people use it. So, and there's been a trend over the past year, people being more inclined to go out there and take control of their finances, invest more, the importance of investing, so you're not in a position that you may have been in should something like this happen in the future. But here's some numbers to really pay attention to. In 2020 alone, DoorDash did $1.92 billion in revenue. They'll probably cross $2 billion, before the year's over, compared to last year where they did $587 million. That really suggests to you right there what time it is with DoorDash. The pandemic created a series of circumstances that were conducive to DoorDash's growth, and now they're going public, and their valuation up. And here's one thing to notice. They're still generating losses. They've yet to turn a profit. Common with tech companies, but still $72 billion valuation, and they've yet to turn a profit. It's crazy. As a matter of fact, their losses are down, yes, but it's still worth $149 million of losses to date. But last year was $533 million, so I suppose they're going in the right direction. But speaking of investments, the public investing, another company that I'm really watching closely, both from a personal standpoint, because my company is actually they call it the Robinhood of real estate, so I watch Robinhood, obviously. Now, in the pandemic, people being at home, their user base grew by up to 13 million, creating more millennial and Gen Z investors than ever before. And now news just hit 2 days ago that they're planning an IPO in 2021. Right now, they just completed a large raise, putting their private valuation at $11.7 billion. And according to reports, they're targeting a $20 billion IPO, meaning that when they go public, they expect the market cap, the value of the company, to hit $20 billion. Again, Airbnb targeted 30, hit 100. DoorDash targeted 30, hit 72. These guys are targeting almost 2x, 2 times what their private valuation is right now, which is already up high based on all the increased activity that happened this year. Now, will this trend of young people investing continue? I believe so. I think it's just going to be more and more. I think they're becoming the de facto outlet for people to go in and invest. They're building that trust. It's just going to become the platform. That's what I see. However, for the IPO, one thing to note here is this is how early investors make their money, with an IPO. But WeWork targeted the IPO pretty high too, and it tanked. If they indeed go that route, I'm curious to see what that will look like. Will they hit the 20 billion? I don't know. I just don't know. But I am very curious about the micro-investor trend, and I do think it's something to look out for. Now, the last company that I want to mention, the last business that I want to mention that I'm really looking out for is the company that you're looking at right now, which is Bold TV. Now, you may have heard of Quibi. I don't even know if I'm saying that right because it doesn't even really matter. They raised billions of dollars and they lost it immediately. So it doesn't even matter. Then you have situations where a company like Mike.com, I think it went as high as $100 million in evaluation and ended up being bought in a fire sale. They did a lot of video and they put all their eggs in that one basket and it went down. And media as a whole has been struggling. However, the reason I like Bold TV, even as I'm speaking on a Bold TV platform, is because there's been a rise of decentralized media. And there are some interesting things that are going to happen with this platform next year in terms of reach, distribution, which I think is very symptomatic about the media industry. Now, for some context, my background comes in media. Before I went into buying buildings left and right, I was actually a director at a media company that was bootstrapped and then eventually sold for $50 million. And the big media companies don't seem to have figured out how to make money in 2020. And there's a lot of new media assets that they're not even considering. For instance, remember in the year 2000, I actually remember that because I was in high school then. In the year 2000, print media sort of looked at the internet as, ugh, you're like this. I'm seeing a lot of the same things with the rise of digital assets that fit the way that people consume media, but you're seeing it in a different format. Facebook, Instagram, different social media platforms that are actually becoming the new media. And I think just with everything that's happening with Bold TV and the different potential acquisitions and partnerships and the subsequent reach that it carries, I think Bold TV could be a very interesting proposition, much in the same way of the other companies that have gone public based on losses and driving value. Isn't that something for investors specifically?